Hi there, good afternoon. You're watching Mutual Fund Corner. I'm Mangla Malu. With me is Reema Tendulkar. A show, remember, as every Tuesday and Thursday, we answer all your mutual fund related queries, equip you to benefit from the magic of compounding and answer all your queries with regards to investment in the mutual funds over the long term. But first up, we take a look at the markets. Another afternoon where we've gained after a slightly tepid first half, and right now the market's gaining steam. The Sensex up almost 100 points, the Nifty higher by about 0.3%. What's also interesting is that after yesterday's underperformance, the mid-cap index is trading in line with the frontline indices, while there is a bit of underperformance coming in from the Nifty Bank, which is up by just 0.1%. What's gaining in the last 1 hour, we have IT stocks, so TCS should come up for you. That one's at the high point of the day, and the metal stocks, they've come off the lows of today's trading session, so stemming the fall that we saw, in fact aiding a bit of recovery that we're seeing on our markets. Hi, Reema.
Hi, Mangalam. So net, we're up about 60 points from the low point of the day. The benchmark indices are up close to about 0.3%, and the bank Nifty is up close to about 40-odd points. Let's first take it away with the top headlines so we can get cracking on answering all your mutual fund queries. It's a recovery on the Lal Street. The Sensex and the Nifty trade near the day's high. The mid-cap index trades in line.
Public sector banks, they're in focus after sources tell cnbc TV18 that the government may raise FY19 recapitalization estimates to about 80,000 to 1 lakh crore from 42,000 crores earlier.
State Bank of India says they've bought 5,000 crore of priority sector loans from NBFCs and housing finance companies and expect to buy another 15,000 crore worth of loans shortly. SBI says they see loan growth jumping from 11% in the first half of the year to 12 to 14% in the second half.
Metal stocks under pressure but see some respite. The index recovers around 1% after news that Trump and Chinese President Xi agree to reach mutually beneficial agreements at the G20 summit later this week.
And the positive sentiment on emerging markets continue a day after Morgan Stanley's double upgrade on emerging markets. HSBC upgrades India to a neutral, while Credit Suisse says that they will sell developed markets into the rallies but remain positive on the emerging markets in 2019.
All right, so with those top stories, let's get cracking and answer all your mutual fund related queries. Joining us today to help us or help our viewers with their investment ideas as well as mutual fund portfolios, we have Vishal Goenka coming in from Wealth Tree Investments to answer all your queries. Vishal, thank you so much for joining in. With that, we move on to our first query. Ronak Surana calls us from Rajasthan. Ronak, good afternoon.
Good afternoon.
Tell us.
Sir, I have mailed my portfolio. I have 78 mutual funds in my portfolio for my goals, which I mentioned. I have linked my goals to particular mutual funds. So I just wanted to know that how are my mutual funds and how is my investment to reach my goals in the future.
All right. So you have his portfolio. He's got around 7-8 mutual funds linked to the goals. So what do you make of those portfolios, and what do you think his portfolio allocation is vis-a-vis the goals that he has?
So it is good to see that he has made his portfolio well defined, earmarking his goals and funds considering for his goals. His portfolio is well diversified, and the only change what he can make in his portfolio is in Parag Parikh fund, which is a multi-cap fund. He can look to stop that fund, and instead of Parag Parikh, he can look to start an SIP in, say, Tara Equity PE fund, which is a well diversified equity fund and which have proven track record in the past, and he can stop that SIP and start a SIP in Tara Equity PE fund. Rest, after seeing his portfolio and his cover, I see that he should increase his term cover, which is very less as per his goals set. Okay, and if he continue investing in this portfolio, he can generate the corpus what he requires for his goals. So he doesn't need to worry about it, provided we are able to generate, say, 14% CAGR return over a period of that goal defined by him.
So what would you suggest his term cover be? Currently he has around 1.5 crores. And secondly, any niggling worry with the fund that you've asked him to change?
See, niggling worry is there is a lot of difference in performance, okay, as compared to his current one and the one which I'm recommending. Okay, so if I say that in last 5 years there is a difference of say about 6 to 7% CAGR return difference, that's actually a huge difference. Okay, and considering his about his term plan, he has about 1.5 crores term cover, and his goal are for 6 crores over a period of time for different goals. Okay, so 1.5 crore is a very small amount which he should increase, considering his whatever liability is there currently, and plus he can considering his living expenses for his dependent family for next at least 25 to 30 years.
Okay. Ranak, that is the advice coming for you from Vishal. Let's move on and try and address the next query. It's an SMS from Naveen Reddy. He's written to us from Bengaluru. So he's a professional, his age is 21, and he's got a systematic investment plan in 5 funds. So I'll just quickly read out the funds. He has Parag Parikh Long-Term Equity Fund, Direct Plan, an ICICI Prudential Blue Chip Fund, an Axis Long-Term Equity Fund, a DSP Small Cap Fund, and a DSP US Flexible Equity Fund. So he's invested about 6,000 rupees per month via the SIP route into all these 5 funds. He hasn't given us his goals, but he's very young.
Yeah.
He just wants you to assess his portfolio. It seems fairly diversified, right?
That's correct. So it's actually very good to see that starting investing in mutual fund at very early age is good for him. Over a period of long run, he'll make good returns out of it. As I discussed to the earlier caller also, that he holds Parag Parikh Long-Term Equity Fund, which is a multi-cap fund, and there are good multi-cap funds available in the market which he can look to invest in. And he should allocate funds. See, he's very young. He would be having few short-term to mid-term goals coming in future, like marriage, maybe further education, house and car. So he should build a portfolio as per his short-term or mid-term goals which are about to come. And plus, he has invested in, say, DSP US Flexi Equity Fund. Okay, see, DSP US Flexi Fund is a feeder fund of US which invests in majorly large cap stocks of US. Okay, and as it is a feeder fund, it is considered as a fund of fund in India. Okay, so it comes with debt taxation in India. Okay, so what he should do, rather investing in such a fund, he can look to invest in some equity fund in India itself, rather putting money in a US equity.
So the tax implications of the US fund are far more than for an Indian fund. He'll be paying a lot more tax. Is that the reason why?
No, it's not tax per se. See, first thing is, as an investor, you understand your local market much better than overseas market.
But he probably just wants to diversify, right?
See, that diversification, just for the sake of diversification, is not giving any value addition to him. Okay, so I would recommend to stop US diversification fund. Okay, see, the reason why you'll invest in US is you have some goals pertaining to US or any other overseas investments. Okay, which I don't think so he has right now, because he's very young. So he is not defined whether he wants to send his child education to US or he wants something in US as an investment. Okay, so I would recommend a diversified multi-cap fund rather investing in a US fund.
All right, hope that answers this question. Meanwhile, before we go on to the next query, just keep an eye out on the markets. We're off the high point of the day. In fact, the Nifty Bank, as we speak, has slipped into the red, and leading it lower is no one particular stock, but a whole host of heavyweights should come up for you. HDFC Bank is off the highs, ICICI Bank is off the highs. Along with that, we have Kotak Mahindra Bank, Yes Bank, as well as SBI from the public sector banks. All of them are off the highs of the day. Nothing which is witnessing a sharp fall. Perhaps maybe ICICI Bank, as of now, as we speak, is off the highs, but others are collectively dragging the Nifty Bank lower and currently into the red. For the Nifty itself, a couple of stocks, they should come up for you. We were talking about TCS at the high point of the day. Wipro has now moved to the low point of the day. And what is taking the Nifty lower is HUL. That one should come up for you. Had a good day yesterday, up about 3.5–4%, and now currently witnessing a bit of profit taking, perhaps currently at the low point or at the lower end of today's trading range for HUL. The mid-cap index is also off its high point of the day. A couple of stocks that are losing there. We have Aurobindo Pharma, which is down about 3.5% from the highs of today's trading session, and Piramal Enterprises, which is down about 4% as well. So we will keep an eye out on the markets. It is choppy. After a sloppy first half, we saw a bit of recovery, and that seems to have been sold into. With that, we have another query. Ronak Rajpal writes to us from Mumbai, wants advice on which small cap fund to invest in. A straight query, which small cap fund is the best?
See, Ronak has already invested in a good small cap fund, that is Reliance Small Cap Fund. Okay, and that is done well in the past. Either he can look to top up his investment in Reliance Small Cap itself, okay, or if he is still looking for a second small cap fund, then he can either go for L&T Emerging Businesses Fund, okay, which has done fairly good in the past, okay, and with a good fund management team and good portfolio build over a period of time. So he can look to add on to either same fund or can start investing in L&T Emerging Businesses Fund.
He's got an investment in Reliance Small Cap Fund, but per se Reliance Mutual Fund has come back to the investments or subscribing to the zero coupon debentures of the non-convertible debentures of Yes Bank. Would that be any concern?
There's nothing to worry about that. Okay. So that is a debt funds investments, and these are equity funds. So there's nothing, those are not linked to each other.
Okay. On that note, we need to slip into a very short break. We'll come back and focus on the markets and also try and address a few more mutual fund queries. Stay tuned.